guys, welcome back to the Capital Mindset Show. Today we got a special one for you guys here today, and it's going to be a Tesla stock analysis. Okay, before we begin today, I recommend you guys go check out Strongman Personal Finance. He hosted me on his live stream on Saturday, February 5th, 2022. And what was quite interesting about that was conversations about Tesla came up. For those of you who may already seen the live stream, the individual known as Tom Nash came on the show and spoke with us. So I want to give out first, respect to him for coming on, sharing his thoughts. I thought it was very good that, we allowed to hear his thoughts, for him to represent himself well, and then for him to present some of his take on a company like Tesla. And I want to be clear before we begin today, I'm going to be taking a serious look, as I kind of stated within that live stream, as if I am going to basically not come to this analysis with any sort of preconceived notions. I'm going to take into account every aspect of the business fairly, and I'm going to do it as if I'm presenting this to my boss, right? As if I'm presenting this as an investment opportunity and trying to seek out what are the potential opportunities with this investment, and where can the business profit if we were to make such an investment. Okay, so I'm going to walk you through a customized model. So you guys are used to seeing the model that has the API and all the fancy smashy tricks, but this is more or less going to be a walkthrough of how we can come together and create some assumptions, those assumptions in those scenarios that you see. So this is going to be a hefty video, and it's actually going to be in a series of videos. This is going to be part one of the series. And what I want everyone to do, and guys can help me with this, is, put all these minds together, is at the end of this video, I want you to maybe comment down some changes you think I'm wrong in my assumptions. And then going forward, as I go through this series of an analysis of Tesla, a very deep dive analysis of Tesla, I can make those adjustments or take those into account. Maybe I missed some things, and then you can kind of correct me, okay, if I'm very wrong. And I'll take your comments very seriously if I am wrong, okay? Now, please, when you say something or when you make a claim, I would love it if you guys back up that claim with some sort of statistic, projection, a reason as to why something will be something in the future, and then that can help the conversation go along, okay? So I'll go over some cases, right, as far as the bullish take on Tesla, okay? And then so the main bullish case on Tesla is mainly one, Elon Musk. Elon Musk is a fantastic CEO, a visionary of our time, and he has developed many great companies in the past and will continue to lead successful companies into the future in innovative directions, okay? Then number two, Tesla has great cars. I can attest to this. I like Tesla. I drive a Tesla, and specifically the Model 3 dual motor. And I can't complain too much about Tesla car. It's a very fun car to drive. I have driven other electric vehicles as well. I'll say that the Porsche is very, very, very good as well. I think if not better. And I've driven that next to I think it was a P90D. I'm sure there's actually better ones for Tesla than that. I've not driven a Roadster, by the way. But the Porsche is a compelling car, but we won't actually speak about competitors because I know all the bulls are tired of hearing that argument, and I won't even make that argument at all. We're looking just at the case of Tesla. Then number three, the brand power. I can actually attest to that as well. My wife actually really likes Tesla as well. I can say that the younger generation views Tesla in a positive light overall. And then we have number four. Okay, and that is China expansion or global expansion. So China is viewed upon as this expanding market where Tesla can acquire greater and greater market share and profits in such a big market compared to something like the United States. That one will deserve its own video to kind of discuss that specific aspect. So I won't really delve too much into China in this video, okay? This video will serve as like the precursor and showing some assumptions or some valuations that we can make. Another bullish point is that 2/3 of EVs is the control of Tesla right now. That's the market share of Tesla. And so the statement followed by that is, as more EVs are adopted, Tesla will continue to have a similar market share and will dominate. That's typically what's said with that. And we also see a lot of mentions of AI. So investments in AI. Tesla is going to be very advanced in AI. Okay. And then that coincides with number 7, which is autopilot. Okay. So autopilot, full self-driving and all that schnaz, right? And then the 8th one, right, which is robots, right? So then robots that Tesla's going to do into the future and the potential of that coming, all right? I want to make sure that everyone understands that the other aspects of car ancillary businesses like charging and all that, I push that in with cars, and we will talk about that. It's not that I'm ignoring it, okay? So I'm going to be talking about every single business line one by one. So I hope you guys enjoy, again, part 1 of this series. And then so some common, I guess we can say that Tesla's very heavily covered here on YouTube, and there's a lot of creators that are currently invested in Tesla, have either were lucky enough to buy Tesla back in the day and then are now, reaping the benefits, or are currently buying more and more Tesla. Okay. And then I'll just say, as a word of understanding, I mentioned this in the past and way back when in another video, that I do have a family member and a very close friend who are very OG investors in Tesla. And actually my family member has sold out and taken all their profits, and now they're much wealthier than they were before. My close friend is, I'm not going to speak on them, but if you're watching who you are, but I think they're selling some of it because they're actually making some interesting purchases. Okay. So I won't really mention any YouTubers except for, of course, Tom Nash, who again was kind enough to show up on the live stream, and very, very much respect to him for doing that. And he claimed on the show that he owns or has 10% of his portfolio within Tesla. Okay. And then by the end of this video, or by the end of this series of videos, regardless of what shows up in the valuation, just remember that this is a market and we can have disagreeing opinions on what the valuation of a stock is. But again, I'm not going to come to this with a preconceived notion. Okay. So we are going to first actually discuss our assumptions, and we're going to first do today the very bullish assumptions on Tesla. And we're going to go business line by business line. The only ones that we're going to ignore, because I will develop them in the future, is robotics. We're also going to ignore for now the most, well, actually, we'll get to that when we get to that, okay? Also, I will not be discussing battery supply chain issues. I will assume Tesla can securely acquire as much lithium as it needs. I will also not be discussing hydrogen technology. I will not be discussing that. I will also not be discussing the debate between LiDAR and non-LiDAR based technologies. That will actually be later, and I'm trying to secure an interview with someone in Luminar for that, and then we can have a decent discussion. Or maybe they're not going to want a live interview. I might do an off-camera interview and kind of pass on the information there and make them anonymous, because I don't know if they're going to be able to talk about that. But I don't want to make any promises on that here. Just know that that might be the route that I take. Okay. So I also will not be talking about specifically the Powerwall division. So nothing to do with like the installment in your home. Anyway, that's such a small business right now. It's not really going to make a big effect on the overall evaluation. But again, that will be something I might add on later. And if you guys think I'm wrong on that, or think what the numbers you think will be over the next 10 years, you can go ahead and comment that down below. And then as the series progresses, I will add these in and I'll take them into serious consideration. Okay. I will be, of course, trying my best to kind of come up with my own assumptions or estimations. So without further ado, we're actually going to go over to the customized model, I guess. It's not really a model. It's actually fairly basic. Well, actually, no, before we do that, we're going to go over what Tesla tells us. Okay. So this is the investor presentation deck. And we're going to discuss some key parts that Tesla is trying to tell us, hey, this is what we're focusing on. This is what's really good. So right here, we can see the average growth in vehicle deliveries has been about 50%. Will that continue in the future? We'll actually see that. And then you see the word supply chain. So for those of you who need a little bit of help on highlighting supply chain right there. And then factories have been running below capacity for several quarters because, again, supply chain, we're going to assume supply chains are all fixed. That's fair, all fair and good, because we would expect that. And then again, we will plan on further expansion in different avenues. For example, Berlin's going to be coming online, as well as the one in Texas. Okay. We currently have California and Shanghai that are operating. And I think California is at 600,000 and Shanghai is at sub 500, sub 400, around there. Now, we aren't going to be talking about the Cybertruck. I will not be discussing the delays or the mysterious absence of the 20K plus cheaper model. We're not going to be discussing that. We are just going to be going off of what the business is doing now. Okay. And again, Cybertruck, when it comes, I guess we'll add that in our assumptions of growth. Okay. And that's how we'll kind of project for that. We won't talk about it specifically. We'll just throw that into the growth projections. So I hope that's fair for everyone. Again, if you think I'm wrong there, please just say, hey, you're wrong. This is why. And then I'll go ahead and probably correct that if I think your point is valid, but I'm very reasonable on that. Okay. Trust me. So let's go ahead and go over here to some measures so you can kind of see the breakdown. All this is on Tesla's website, investor presentation deck. All right, coming back here, we can see their profitability metrics, or they're trying to improve how much margins they're getting from each car. Cool, all well and good. We'll actually show that or project for that in the model. And let's actually go down to here, because I think here's the competitors. They're showing that they have the highest margins. They have the highest vehicle delivery growth. So the gap operating margins is really important. So when you look at car companies, gap operating margin shows the efficiencies. Okay. And Tesla is now actually showing the highest efficiencies among the other car manufacturers, Toyota actually being the second highest. And I'll tell you, Toyota's probably the second highest line there. Tesla has seen marginal improvements. And actually, there's a book that you guys should all read if you guys are interested. It's called The Toyota Way. It actually explains why Toyota had such dominance and efficiencies for long periods of time. So now Tesla's actually seen massive improvements in that efficiency. Okay. So they actually become one of the best OEMs in the market. So without a doubt, we can't sit here and say that Tesla's a bad business. I think that argument was usually always flawed. It's not really much credence to that argument. Okay. So vehicle software, this is a big portion where the business is expected to grow because we'll actually see that when we go into the custom model for Tesla, but we're going to throw in some projections as to how much they grow that by. Right now, the price is about $12,000 for full self-driving. And then I think there is a $200 a month subscription version of it. But we're just going to go off of the $12,000 buy price. Okay. Energy storage is increasing. So it's growing off of a small base though. So that it is growing, but it's not that big yet. Okay. And it's not going to be big for a long time unless we see massive acceleration, but there's a lot of competition in energy storage and the margins are nothing. Okay. So that's more or less, if I can explain that out, that's why I'm not really including it just yet. And I don't think it's going to really affect the numbers too much. Okay. So I want you guys to know that. Again, if I'm wrong, comment down below and why I'm wrong, and then I'll consider it. We already went over this, but I do believe the company is absolutely correct here. They have plenty of cash to cover their expenses. We'll actually go over their cash pile. And I do think that, volume is going to continue to rise, but we don't know by how much. And then we'll see what happens with the Cybertruck. Okay. So on that note, let's actually go over to this is the custom model just for Tesla. And basically this is how I would create my assumptions going forward. And when we go to the main model, remember we have those 5 assumptions. Well, how do we create 5 assumptions? Well, this is how, you really get down and dirty, and then you got to figure out, well, what is a fair assumption? Okay. So normally you can kind of go around that by creating a wide range and then going with the most conservative one. But I really wanted to break down the Tesla bull case, right? And I'll explain what everything means. Right now, nothing's plugged in. So don't actually take these numbers for what they are. Okay. I want you guys to know that. So right now, nothing means anything. The only thing that mean anything are the base numbers over here on the right-hand side. And I'm going to zoom in because I know you guys, the recording the difference in video quality causes, you know, the screen to look smaller for you guys. So right now for me, this looks really zoomed in. For you guys, it's not going to look that zoomed in. Okay. But I'll deal with it. That's my burden. Okay. So over here, what I want to explain, and I will do my best, guys, and I'll try to be verbal because I know some of you don't watch visually the videos and you guys just listen to it. So here on the left-hand side, we have the current numbers, 2020 and 2021 for how many Teslas are sold. I have it broken down by model, but I'll be honest, that doesn't really matter too much. And then so market share for the United States in 2021 was 2.37. It increased from 1.42. So that's a pretty big increase. And then in the world, it went from 0.78% to about 1.4%. This is again due to the Model 3. The Model 3 came in and actually caused this massive ramp up in market share growth and very good for Tesla. That also coincided with the massive run up in the stock price and the massive improvements in operational efficiency and all that. Okay, so that was the Model 3 basically coming in and causing that. Now going forward, we got to make some assumptions. Everything that is a white cell in this model is something that we are going to assume, and I'll explain why we assume. And again, to reiterate, if you think my assumptions are wrong, mistaken, or whatever, comment down below. This is just a rudimentary showcase of the model, and this is just customized to Tesla. And again, you can please explain why it is that I am incorrect and what those assumptions should be instead, and why do you think that, okay? So going down here, we can see the production rates in 2021 for the United States. And this is the Model S, Model X, Y, and 3. And that's how Tesla has broken it down. And then we can see here a percent sold of production of 99.39%, which is really good. So basically that just takes the amount produced versus the amount sold. So for example, when you buy a Tesla right now, typically you order it and then you wait for it and then it gets delivered to your home. So this number makes sense. It passes the smell test. It's a very different model or business model than a traditional car. I actually prefer, if all car companies go this route where they eliminate the dealership model, because I don't really enjoy going to a dealership, I prefer to just go online and just deal with it. There are some advantages. I will give the dealers that, you know, for example, some operational advantages, but however, I think the benefits do not outweigh the drawbacks. The drawbacks are about a mile long of a list, and the benefits are rather small and most people don't notice them. Okay. So again, we're going with the self-driving price of $12,000. And again, we have the 2021 sales of self-driving and 2022 projection sales of self-driving. I want everyone to know when you see the number 1, 2, and 3, this is 2021, this is 2022, this is 2023, etc. Okay. And then I'm going to be, again, going with the more bullish stance in this video. So if you guys think I'm being, again, too aggressive, you know, so you know. Over here, you can see the operation margins compared to everyone else. You know, in the Tesla investor deck, they just showed it on a line graph. Here, I'm showing it to you with numbers. Tesla is at 12.11%. Toyota is at 11.77%. Toyota is famous for being one of the most efficient of them all. And then there's Volkswagen down there at 11.5%. Yes, I did not add every car company. Please have mercy on my soul. I did not want to add every car company. I just wanted to add these big ones that everyone knows about. And I added Ford and General Motors because the other 2 American car companies. Okay, and then we have the third part of this page, which is the charging stations business. And then we're going to discuss, you know, again, those implementations, but I will ignore that for now. And we're going to go over here to our assumptions. So I have written down some assumptions that I'm going to add. And right here, it's going to be a 0.05 growth in the global cars, right? Global car sales are going to grow at 5%. That's what I have assumed there. Okay. Now the share growth, okay, this is where things get interesting. This is actually very important metric. This is where you have to get things right. If you don't get things right, this is, you know, your assumptions are going to be way off. But again, we're going to go with the bullish case. And again, if this bullish case is off, then our valuation is going to be really off. Okay. But we're going to go with the bullish case and we're going to go with 39%. I picked that for a reason. Okay. And the reason why I picked that is actually, let me pull it up here because I saved it. It's just so everyone doesn't think I'm absolutely bonkers when I just say something like that. And where is it? Here it is. Okay. So I just took the projections here Tesla's growth plans in 2020, the company delivered blah, 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 blah. And then in 10 years, it'll be 28 million cars annually. And this is posted on the motleyfool.com. All right, whatever. So I think there were other figures that showcase 28 million cars that had these projections of 28 million cars. 20 million cars is very respectable size of deliveries. And we'll actually showcase how that might actually have to be the assumption. Otherwise, things get a little toasty. All right. So let's go back. And that is exactly why I chose a 39% share growth rate. Okay. And then that's basically taking into account the global market of cars, and then Tesla's competing in that market for cars and then collecting a greater sum of it. So this growth rate is actually quite drastic. It's actually going to be, it's a very large growth rate, because if we look at, for example, the growth rate of the globe at 5%, so the globe's growing 5%, and then from that number, Tesla's getting an additional 39% each time. So that in 10 years, the market share is going to equate to about 27.19%. Okay. Yes. Very aggressive. I know. We'll get further down the road. All right. Oh, I wanted to mention before we continue, do you guys see this market share over here? This is actually highlighted by Tesla bulls. And it's actually shown or used as an argument for a total addressable market. They usually say the words, typically when I watched other videos, and I did so in preparation for this, so I can understand how other people are thinking on the YouTube landscape. And they say, okay, 2.37% of total market share. And then that's a lot of room for them to grow, because, there's about 97.7% left to take, right? So that's a lot of room to grow. Okay. By the way, just so everyone knows, Toyota's market share globally is 8%. Okay. So just for a reference or share in mind, that's Toyota's market share, and they are currently the largest car company in the world. What I am assuming is that Tesla over time will take 27% of the world's market share of vehicles. Okay. Now, here's very important. We have to assume an inflation rate. All right. That's what basically this is doing. Let's assume an inflation rate, and this is where we might get contested. Okay. Some people might say your inflation rate's too low, your inflation rate's too high. Okay. Fair. I'm going to assume a neutral 2%. Okay. This is where we're going to probably have to change things in the future. Okay. But inflation rate of 2%. So Tesla is going to grow its car prices by about 2% per year. Okay. And then the net income margin, I'm going to assume the highest. I'm going to assume that so Toyota's is about 11%. I'm going to assume Tesla at 11%. Okay. For each of their vehicles. Okay. Now, here's an important caveat. So I actually threw this in here because I think we're going to see the marker. So Cathie Wood says that in 2025, and you can see here, year 5, I highlighted this here for you guys. Down here's her price target. That's why it's there. In 2025, the price target will be about $3,000, which, assuming no share dilution, right? Very important. No share dilution would equate to, right now with the current shares, about $3 trillion in market cap. Okay. And we'll get back to that, but I just want you guys to know, because I know you guys probably saw this and you're like, what is that? That's Cathie Wood's projection. And actually I threw in Meet Kevin's here, because Meet Kevin is another prominent YouTuber who did make an extensive video about his opinion on where Tesla will be in 10 years. And his was 10 years. So I was able to put it in the 10-year marker because I was trying to find if Cathie Wood made a 10-year projection. She didn't really make one that I could find on a preliminary look, but I could see everywhere her 5-year projection. So I just used her 5-year projection, and then I used Meet Kevin's 10-year projection. Okay. And I'll explain what that means. All right. But here's the problem, right? So we are projecting a growth rate in cars, right? That assumes, some economic growth globally, correct? Because when we go down to the population tab, this is where we're starting to calculate the population, by the way. Oh, by the way, if anyone sees any typos, go ahead and shout those out, because I sometimes, when I type fast, I have typos. So scavenger hunt for you guys to hunt those down. All right. Anyway, the working population of the world, before we begin, statistically, all right, according to The Guardian, that's why I put The Guardian right here. So this is data from The Guardian, is 3 billion. All right, 3 billion, because you have kids that aren't considered working age population and geriatrics, which aren't considered working population. So about 3 billion. All right, and then we have population growth, which this data actually comes from the UN. I forgot to put that there, but that's coming from the UN. And the projection for the next 10 years is about 2.46%. So that's where that assumption is coming in. And those aren't in white because those aren't things we're going to change. We're just going to use the quote unquote official data. So then again, we're assuming the same growth in price. That's porting it in from the other sheet. And here's the thing. So when I looked up the average or the median income of a Tesla owner, it's about 160,000, 120,000. I actually got conflicting information on that. So what I did is I went a little bit more bullish than that. So I lowered the median income for the Tesla owners to 100K. And this is per household. Okay. So to be very clear, per household, 100K. And then when I used or found out the percentile of the world that generates 100K, I got 1%. And the reason why we're doing this, we're going this route, is because Tesla's a global company with global ambitions. So we're going to use a global number. And then we're going to, model out or pencil out what a global reach for Tesla would be, not just the United States one, because that wouldn't be fair. Because if I did that, you guys would be like, you're not counting the world and you're undercutting their growth, right? We're going to assume their full growth into the world. So we want to find out what is their total target audience. Okay. So again, the median, and the reason why, before anyone asks about that, the reason why statistically we're going to use the median income and not the average income is because if we use the average income, it will skew the data to the upper ends of the income spectrum, because the very high income earners who do buy Tesla, they're going to skew the data. So it's going to look a lot higher. Okay. And then if we use the median income, then we're getting the actual middle or quote unquote statistical average. So, but I'm going to be a little bit more fair to Tesla, and I'm going to lower that. Whatever the number is, I lowered it to 100. Okay. And I think that's fair enough, because if someone's going to be buying a $50,000 car, $60,000 car, it may be more financially responsible, by the way, longer term, to not buy a car if your income is 60K, right? It's not financially responsible to buy a $60,000 car, $50,000 car if your income is 60K. If you're at 100K, you can make the argument. If you're 120, now it starts to get more reasonable. 150, 160, you're in the ballpark there. There, you're good to go. Okay. But again, we're just making those assumptions. Again, if I'm wrong, comment down below and why, and then we'll change it in the future. Okay. And then, so here we see the growth in the potential of the customers that Tesla can acquire, right? And then you can see that growth right down here, okay? So going back to the car sheet, we take a look at the some of these other things, and I'll highlight them for you guys here. So here you can see the sales growth, right? And you can see that with 39% market share take, they are growing substantially. I want to highlight, I actually already have them highlighted. These are the key things to really look at. So this is the net income at the end of 10 years. It's 205 billion US dollars. So don't think that I'm undercutting Tesla with these assumptions. If you think that, I really, really, really want to know why I am. But that's the projection, 205 billion US dollars. They would be making more money than any US corporation at the moment. I think even more than Apple, but maybe not more than Apple. Don't quote me on more than Apple. It might not be more than Apple, but I'm kind of certain it is more than Apple. All right. So looking at the potential population that they can acquire, we can see it growing and growing and growing. Right. And then that's the percent of the population right here that they're supposedly taking in. And that's percent of this population. Okay, so the percent of this population, because if we see what that calculation is, it's essentially the vehicles divided by the population, assuming that each individual person is a buyer. Okay, and well, household, if we're being honest on the household. Well, no, that's actually, sorry, no, that one is people. Yeah, that one is people. So each person in those households, that's how you have to say it. Each person in those households are buying one of those cars. Okay. And that's the percentage, and it's growing. And eventually it will reach 73% of all these people in these households have a Tesla. Okay. So don't think I'm undercutting them. Okay. And then yearly potential, this metric's actually really important. because it assumes that this population is taking about the average time. Again, this is another assumption. This is the last assumption. Actually, this should be white because it is an assumption, but I think it's a fairly fair assumption. And it's the churn rate of vehicles. Okay, so the average household in the United States, at least, or globally actually, is about 1 every 5 years. So every 5 years, they usually change their cars to a new car. Maybe you think that number is higher, so the higher churn rate would actually be more favorable, and that's fair. I could change that. Please explain why I'm wrong there, and then I can increase that churn rate. But that's the preliminary churn rate. So again, I'm with a 20%. We're assuming every 5 years I change my car. I'm getting a new car, and all these people that are changing their cars, they're doing what? They're staking with Tesla. Every year, they're going to be buying a Tesla. So that means we have repeat customers coming back and back and back, right? So none of those people are switching over to other cars. They're all staying with Tesla. As soon as they get converted to Tesla, they stay on Tesla, okay? So we're making that assumption as well. Again, don't think I'm undercutting them. I'm fully, saying, yeah, they're going to continue to just keep those very loyal customers. Great. All right. So now this is a metric that I created because I needed to understand something. And that when you, I guess when you're confident enough in math, and maybe I'm just a complete fool and I shouldn't be confident, but I think I'm confident enough to create a metric that kind of captures what I'm trying to find out, what I'm trying to investigate. And I called it true capture. And I'll explain what that is. True capture is basically a percent value that tells me of their target audience based on the churn rate, how much are they capturing, right? True capture, right? This is what I believe to be the true market share of the addressable market that is looking for a car in their target audience, okay? So again, we know that their median income is about, for our assumption, 100K. We know that it's technically higher, but we brought it down to 100K to include more people in that potential. We know that potentially people are going to change their cars once every 5 years. So then of those people, we're assuming none of the current people who have went with Tesla change. So we're sticking to the same. And then from that, the percent that Tesla is capturing, that's this metric. And if we do that, this model is telling me by 10 years, they're going to be capturing 367.7%. which is fairly interesting because if we look at it like this is why I said it was misleading. Remember that statistic all the way back here? And I hope I'm not overwhelming anyone. I really, well, when I say overwhelm, it's not because, it's super complicated. It's because it's a lot all at once. And then I hope I'm doing a good job of explaining it. Okay. Cause that's important. All right. So remember I said the market share 2.37% over here. Well, I said that that's kind of misleading. And then that's usually used to kind of justify this. Look how much more reasonable this is. The market share goes from 1% to 27%. Someone might go immediately, well, that's not reasonable. Toyota's at 8%. That's a fair argument. Okay. 27% may be unreasonable. Well, what I'm trying to show is with true capture, right? This is not, anywhere you'll find online. True capture. This is the capital mindset measure. I'm saying that the market share couldn't possibly get there because realistically, that would be about 367.7% of the addressable market that they're currently targeting right now at this present moment. Okay. Now, unfortunately, I cannot make an assumption for the quote unquote affordable car because I have no idea when that's coming out. And so that could, change things. I would have to implement a little bit more math or a little bit more to the model to kind of account for that. Right now, I'm accounting for, pretty good margins in the current lineup of vehicles that they have and the current price setup that they have. Okay. So, I mean, we're assuming by this point, right? So the car sales, they're going to sell about 100 million cars, right? Yeah. 100 million global car sales. Sorry, of that, they're going to sell 28 million cars, which is the projection, right? So that's kind of what we're assuming. And so I'm actually maybe being a little bit too generous because maybe a lot of that 28 million has lower prices. And so these numbers actually should all come down. Okay. I am to be very clear. I am basically assuming that all of the cars that they're selling are the higher end, are the Model 3s, the Ys, the X's, exactly, all that, right? And then you can throw in the truck in there because the truck's going to be about the same price range around there. So yeah, throw in the truck. I'm basically saying they're going to hit 28 million cars in 10 years. Okay. So That's a lot of cars. And so again, they're gonna dominate 27% of the market share. So that actually makes sense that we see this true capture being so high, because when we take into consideration the population that exists in that are very low, and then this population might change their cars way more often, because the real average of the lower income thresholds, they're going to be changing their cars less often, or more probabilistically. Remember also that Americans are kind of weird for the rest of the world in terms of how often they change their cars. They change their cars more often than the rest of the world. So we're taking into account all of that. All right. Hopefully you guys are still with me with this assumptions. Right now with the self-driving, I'm making the ridiculous assumption that the margins are 100%. There's no cost of the goods. They're keeping all the money. Okay. So what I did was I took the $12,000 price tag. I applied it to the amount of percent that people currently adopt of it. And then I basically exponentially grew it to about where it gets to $30 billion in profits in 10 years. And also, by the way, from what I found online is that one, the full self-driving capabilities are to the Tesla owner, and then do not transfer when that person gets rid of that car. So if I get rid of my Tesla and give it to someone else, this full self-driving does not transfer over to them. And also, if I get a new Tesla, then I have to repurchase full self-driving as well. So that's again the assumptions there. If those change, for example, if someone buys full self-driving and gets to keep that for the rest of their life, this number will come down drastically, because then we would have to assume the repurchasers or the churn rate, they're not actually charging or getting charged this. So this is actually, I'm being very generous to Tesla here in this assumption, not conservative. I'm being very, very, very generous. Okay. And I'm assuming that I'm basically more or less being neutral, because I'm giving them the best case scenario that, these people just keep buying full self-driving each time they get a Tesla. And then if I give the Tesla to someone else, they have to buy full self-driving. So then, it's better that way. Okay. So, this is again, going to be already on its own. If this comes true and my assumption is 100% margins, whatever, that might be also unreasonable and unreasonably bullish in that sense. But again, full self-driving, yeah, we get $30 billion in profits. That would be quite the company on its own at the right price. And it's a software business. So amazing. All right. Now we're getting down to the charging stations. Okay. So this business is quite interesting, because this is like the gas station, the future gas station. It's the future, bro. Right. So here I assumed, again, we're just going to go straight with profits. So I'm going to be quite generous to Tesla. Again, the goal of this scenario is to be very generous across the board. So assume full charge. So I'm going to be assuming that the current battery life, not the older Tesla models, just like the current size, I found it to be 100 kilowatt hours for each car. Then the assumption, and not the assumption, the unit measurement of 2021 is 3,476. So that grew from 3,022. And then the number of stations, sorry, not the number of stations, the charging stations cost is about 28 cents per kilowatt hour. And then we're going to assume the full charge for each car is $28. Okay, $28 per car. We're going to assume each car comes in, it's like almost empty and gets the full self-driving. And then we're assuming the fastest charging time, so the highest efficiency, which is 30 minutes. Okay, I saw it's 30 minutes to an hour. We're assuming they're all 30 minutes. They're very efficient, that we can go boom, 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 new customers every half hour. Okay, then because of that, we can see that per revenue per charger, right? And this is, I think, did I assume? Yeah, I assumed 24 hours. So I assume 24 hours of charging, which equates to about 48 cars fully charging. That comes out to $1,344 per vehicle. Okay, that's quite an exaggeration, I think, because I don't think it's possible for a Tesla charger to actually pull out 48 fully charged vehicles. I think I'm being very, very, very generous in my assumption there. But yeah, again, the goal is to be very, very generous. So, no one can say I'm being disingenuous with my assumptions. All right. So annual revenue would equate to per charging station of $490,560. And you know what? Screw it. Let's just say that's all profit. Okay. That's all profit. None of it is non-profit. All right. So there's no cost to the charging station, which realistically there is. Okay. But again, I'm just assuming it's full profit. Okay. So then we have a total of $1.7 billion in profit right there. Great. I love that. And then let's go to our growth and station. So that's just kind of like the baseline. This is actually where the magic's happening. So this is just to give you a little taste. This is where it's actually going to matter. So we want a growth in stations. Let's assume, again, change. You want to change these numbers. Comment down below why I'm absolutely wrong, and they should be different. Okay. So right now we have the 15% in growth, and then let's assume a decay of 5%. All right. So what is a decay? Well, a decay is important because it assumes deceleration. I didn't assume decay here, even though I did model it in there. So this calculator is actually capable of factoring in growth deceleration. Okay. And then I could add in another formula to add in growth deceleration acceleration. Okay. So basically the decay factor grows in time as we go on through time. Okay. So I could add that in if you guys think, that I should, and, but I wanted to be very bullish and be like, no, there's no decay. It's never going to slow down. It's going to be 39% each year averaged out for the next 10 years. That's what I wanted to assume. So just so everyone's clear on that. So over here, I am assuming some growth and decay. And here, the reason why I'm honestly, you know what? No, I'll keep it like this, but I could make it higher if you guys want me to. Okay. And then, so this is the amount of charges per day. So this is very important. So before I did assume there was like one car every 30 minutes. And, that equates to about 48 cars. Okay. Here, I'm going to be a little bit more conservative and be more realistic based on my observations and, what I've seen in personal experience. And I'd say about, like six per day. I think that's fairly reasonable. Okay. So if that is the case in the future, what we can expect is that Tesla will generate nearly $1 billion in profit, because again, I'm assuming no costs associated with this, but $1 billion in profit from the self-drive, from the self-charging station, not self-charging, fast charging stations alone. Okay. And then when we look at that, that culminates into a total profit net income of about 246 billion US dollars, which implies a growth of about 51.86%. Very important to take note of that. Okay. So that is our profit. Okay. After 10 years of all this growth, all this innovation. And again, what we're missing in is the energy segment of the business, which I'm not counting because right now the solar and the Powerwall stuff is basically barely breaking even. Okay. Will it grow and contribute something? Sure. But I think I'm being so extraordinarily optimistic about everything else that I think I might even account for that at this point. Okay. So we are basically assuming they're going to be one of the most profitable businesses in the entire world with this amount of cash coming into the business. And I want to then now discuss Kathy Wood's prediction as well as meet Kevin's prediction. So according to Kathy Wood's prediction, the current prediction she has is about 3 trillion in 2025. That would assume about, again, according to these growth rates, these assumptions, and I think these assumptions are fairly drastic. That would be, or maybe not, actually, let me correct myself there. Maybe they're not very drastic. Maybe they're exactly what will happen. But that would equate to about 107 multiple. And, there you go. All right, 107 multiple. But then going forward, when we get to meet Kevin's, it's about at a 30 multiple. Okay. So far more reasonable because we're then assuming a continued growth going into the future of, greater than the percentage shown here. Okay. Because again, we're growing it at 39% plus the 5% of the global. Okay. So it's quite drastic because again, we're going from 900,000 vehicles to 28 million vehicles. We are assuming what that projection is. And I don't think anyone can, please comment down below if that's, conservative. Okay. I would really like to know, but I don't think I'm being conservative. Okay. So again, if you guys want to know where I got this value from me, Kevin, it's at his video right here, why Tesla stock is cheap, Tesla to $6,000, full details. And then, yeah, so I imagine most of you have. All right, now we're going over to the model, the ones you guys are very used to. So we're off of that monstrosity of a model that was created just for Tesla. So let's actually plug in the Tesla ticker now. And let's see what the analysts say. So the analysts are saying a price target of 967.07, implying a 4.7% upside. All right, if we don't grow at all, the model's telling me, hey, it's worth negative because we don't have a discount rate. So let's discount it at 10%, market average rate of return. This implies 159.37% upside into the future, okay? So then buybacks, we said no buybacks, no dilution. Let's keep it simple. Let's even erase this because that's a distractor. We see the average growth rate has been about 39.2%. And probably, well, it's accelerated technically in the most recent years. Okay. But yeah, that's basically where we're going with that. And let's go with the scenarios. So with each scenario, we are going to go with our bullish case scenario at, let's actually review what that was, because my memory just went kaput, and it's 51.86. So 51.86 will be that scenario. So if that were to occur, our buy price is $2,151.74. Okay, let's discount it at slightly above the market average rate of return. So 12%. So to quote Tom Nash from the video, I have basically assumed these, well, I assumed these assumptions. I desired to make 12% rates of return, and I will generate about 210.5% upside. And he quoted, or he said in the video, the buy price, or not the buy price, the fair value of Tesla is $1,500 US. So then that is about where we are right now. And again, going back to the Tesla custom model, those are all the assumptions I have made to come up with such a thing. Again, considering population growth, target audience, et cetera, et cetera, et cetera. And also remember all the caveats that came with that. Okay. Again, I did not consider, all right. Oh, did I show everyone the insurance? Actually, I didn't show everyone the insurance, but let me actually quickly show you guys the insurance because I really wanted to show you guys that. So basically with the insurance, by the way, the net income includes insurance. So if one of you guys was doing the math on your own, you're like, it doesn't add up. The math doesn't add up because I didn't show you guys the insurance, which is also being added in there. Okay. And then basically that's the profit I believe they can make. And I assume that eventually every single person, every single one will eventually have Tesla insurance. So I don't think you guys can say that I'm being conservative with this. Okay. They're basically becoming one of the largest insurance companies in the world with my assumptions. Okay. So I really don't think I can be called conservative with this. Okay. This one, I'm very confident. No one can say that. But if you want to, go ahead and make the argument down below and say why I'm wrong and why I'm stupid. All right. So, because I very much well could be, I don't know. Like I will change my mind if the facts change. Okay. So I assumed this Progressive, I took their margins 15.56%. And I said, Tesla is so amazing, right, that they're going to have margins that are 50% greater than that of Progressive, right? And those margins will be 23%, right? Whatever, 23%. And they're going to be really good and really accurate at measuring risk. They're going to have 23% margins. And then I took a conservative measure by Tesla of what they would charge their for their interest rate, for their insurance policies. Okay. And then there's a lot of factors that go into it in terms of risk and stuff. But I also found out in my research that this is actually fairly normal. State by state, certain states are really expensive for Tesla insurance, and other states they're the cheapest. So for example, in California, which actually, you know what, I can just pull that up here because I took screenshots for everyone. So let me actually go ahead and pull both of those up so you guys can actually see that instead of just taking my word for it. So let me see Tesla insurance. Here we go. This is this is California. And then I haven't shown it to you guys yet. Don't worry. Yeah, California. Where's Texas? Here's Texas. All right. So two clear examples of very different insurance policies. So this one is Texas. And at Texas, you can see Tesla is the cheapest. They're about $1,795 per annum, right? And let's then get you out of here. And then let's take you over to California. Where did California go? California, why'd you disappear on me? California just escaped. It's running away from me. I don't know why California doesn't like me. California. Oh my gosh, Kevin, if you are paying this much for Tesla insurance, wow. Move out of California. Well, I mean, I know you said your wife wanted to stay there because of the weather. I can respect that. Wives are very powerful in our lives. And so here we are at California. So California, you're paying about from Tesla insurance, 3,315. They're not the cheapest, but remember Texas. So I went with the conservative measure, not the conservative measure, but the aggressive measure that Tesla is going to be very cheap insurance. And, I think that's part of the bull case for the insurance that I wrote down, because I watched other people's take on Tesla analysis. And for the most part, what I was getting is the argument is Tesla will be so efficient at writing these policies that they're going to, take on very little risk. I think I showed that in basically taking Progressive's results and then just saying Tesla is 50% better than them. Okay. So 50% is a huge deal. So I'm basically saying this old legacy insurance business, they have all this experience. Nah, Tesla's going to kick their butt. Right. And that could very much happen. Right. But that's the assumption. Okay. And then I'm also assuming that Tesla is very competitive, because I'm saying they're going to do $121 per month in insurance. And that would essentially make their policy about $452 per year. And that was, I think, what they originally were advertising as the potential of what they would do. And they gave off this chart where it was, the safety score rating and all that, blah, 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 blah. So then the margin per customer would be $339. And we extrapolate that to the entirety of the user base. And then we end up with about the figure I stated right here, which is 9.5 billion, which is more money than Progressive makes. Okay. They would be a bigger company in the insurance business than Progressive, Tesla alone. Okay. So I don't think I'm being conservative with that. All right. Going back to the model that we were just at. We just talked about the insurance. Now we're back. Okay. So the growth rate, I'm assuming, is 51.86%, 12% discount rate. And then we are at the Tom Nash price point or fair value point of $1,518 and 0.15. Okay. 12% return, required rate of return is above the market average. Market average is about 10%. And if you could get 12% over the course of your entire lifetime, you will do fairly well for yourself. However, we made all those assumptions. Remember, when we created this scenario five was with all the assumptions that, rewatch this video, and then you can remind yourself about what all those assumptions are. Okay. Let's see what happens if we want a greater return potential on our investment. Okay. So again, if our goal is in 10 years time to make 12% per annum, you could say its fair value is 1,500 based on those assumptions. Okay. So let's go with a 15%, which is about a 300%. Okay. Even then, the actual buy price, right? Now we're not in fair value. The fair value is technically 978. Okay. And that would be our purchase price if we wanted to make 15% return per annum, right? With a 51.86% growth rate. Okay. And again, remember those assumptions. All right. So let's say, for example, let me show you what happens if the growth rate substantially isn't up to expectations. This drastically changes the potential. And I will actually think maybe 20% is our low. Let's go 20% is our absolute low. And then let's go with 40%. So 40% per annum is actually in line with what they averaged out, excluding the most recent year, which was about 50 something percent. Okay. So excluding that, they're going to continue at 40%, which is still very strong growth, just so everyone knows, right? So let's actually go with 45. Let's be a little more aggressive, right? 45, and let's do 40. And how about this? Let's move this because we are going bananas here. Oh, I can't do it that way. I got to do it 51.86. And then let's go with like a 70 because we are absolute bananas. So basically all those assumptions we made in the last one, all those are wrong. That means that robots come in and they take over. And then battery storage becomes incredibly profitable when everyone buys them. And then solar panels everywhere, solar roof everywhere. Okay. So 70% growth rate per annum. The fair value becomes $2,786. And then you would generate a 15% annual rate of return. Okay. But that's only making us 304%. I don't like that. Let's go with 17, right? So 17, now we get into actually that the 51 is not even enough, right? And then we would be generating 380%, again, if those assumptions pan out. Let's see what the model requires of us. Let's see if it's not 600, 60%. All right, 60%, no, 55. Oh, we're very close to 55. Is it 56? 56 will take us right over. Yeah. So 55, 56% growth rate is what we would need to get that 17%. And then for that 20% required rate of return, we then probably have to assume that's 70. Let me see if that 70 comes in. All right, that 70 is right there. So now we're actually maybe back to the Tom Nash fair value if we can grow at 70% from here every single year for 10 years. So basically take all these assumptions that I posted here and then make them even more aggressive. And then we would achieve about 70%. So let's play with those together. And again, I know this is a long video, but I want to make this point here. So we had to get this number to 70%. All right. And then so how are we going to do that? All right. So let's see. We can say we can grow the global growth. Okay. So let's say it's 0.10. All right. So now we're at 60. All right. Let's go bananas. Let's say the price, the inflation is 5%. Okay, no, let's say it's 10%, 10%. All right, we're at 70. So there we go. We basically increase the rate in which Tesla prices rise and people will still buy. And then we also grew the population growth by that much. Or we can just bring this down to 5%. And then we can just play around with this number over here. We can say that the share percent growth is actually, oh, don't want to add that, is actually there. Oh, we're almost there. Let's see, 45. But yeah, right there, 45%. So 45% share growth at the end of the 10 years, they will control 40% of the market. So here, and they will have 817% of the true capture, right? Yeah. So each of this target audience will have 8 Teslas. That's basically what we're going to get at. Or I want to be, very careful how I say that. Or we could make the assumption that Tesla comes out with the cheap, affordable version of the car. And then that's, this number is not really there because we're expanding the audience. And so maybe this number is more accurate. Then we go back to this number, and this number is where we stay. Okay. Because that would be the market share of the entire world. Okay. Because now we have the affordable car. So, there you go. Remember that Toyota is the largest one and they have 8%. So this will be the biggest car company in history. Okay. But again, there we go. So that would be the 70% growth category. And then we're at basically back to $1,500 in fair value with a 20% required rate of return, implying a 519% upside. Okay. Let's take a look at what 21% does. All right. 21%, we're still in the buy zone with that 70% growth rate. Again, with all those assumptions. Let's go with 22. All right, 22. And then what was 21.5, I think was the 600. This is the meet Kevin requirement. Okay. So again, this is the $1 trillion now to about 6 trillion in 10 years. This would imply 600% growth in the company. And we can assume that if we get a 70% growth rate. Let's see what the minimum threshold is, because I'm actually fairly curious. Okay, definitely not 60, 65. Okay, 65. I think 64 would be a little under. Yeah, it's a little under. So 64, 65. So let's do 64.5%. Yeah, we're right there. Look at that. 64.5% growth rate. All right. So that would be the required rate of return. Let's see if it 10x's, and 10x is 27.5. Was that? Yeah, I'll count that as 27.5. So 27. No, I think it's 27.1 is the exact. Yeah, right there. Boom. 27.1. So even if we want a 10x from here, which would imply a $10 trillion market cap, we need greater than 70% growth. Okay, so that would be, let's see how bananas we get. 80, 75. Oh, not 700. 75. Oh, there it is. 75. So we can assume a 75% growth rate. Again, we would have to make even more aggressive assumptions in the other model, and then we can come up with that. And then that would give us a required rate of return of 27.1, which would imply a 10x in the next 10 years. And that would be Tesla right there, right? The epitome of Tesla at that point. So taking a look at everything, I think these are so far the preliminary assumptions. Again, I discussed all the other things I'm going to or plan on doing eventually with Tesla and trying to make this a series. This is kind of just a taste of how much research really should go into a company like this. Again, there are a lot of assumptions being made here that if you think are incorrect, go ahead, comment down below. Please feel free to let me know why I'm wrong. I am open to hearing you guys out. But please, when you say why I'm wrong, explain why I am wrong. And then, feel free to leave like a link to some sort of data, or if you just type the data out, like a statistic, and then throw the link. I probably won't go on the link. I'll just trust your word for it, or just like compare notes with you guys. And then you guys will help me basically think about, where I can adjust some assumptions. Also, please feel free to leave your comments about the robot. For example, I have some statistics saying that the robot will have a sale price of $10,000. Please feel free to leave your bullish case on that, so I can go ahead and add that to the model, and then I can maybe pull back some of the assumptions for the car, make it a little bit different. Again, I'll have those. I'll try to do more research in terms of like doing an interview with a LiDAR for someone from Luminar about LiDAR. And if you guys have any, takes on Luminar, I already know Elon Musk's opinion on Luminar. But, frankly, in my work, when I consulted with, what I would consider subject matter experts in LiDAR technology, I'm basically told everywhere that no, LiDAR is actually the future. But I'm going to go at it with the assumption that I don't know, because I'm not the expert. And then I'll try to get that information out to you guys. Again, also, if you guys think I'm completely wrong in the population and I should expand the market, please let me know. But just so you guys know, that metric does not affect the projections on net income. It is simply to basically take this true capture measure. So I imagine there might be a lot of questions about the math involved, and I will be very happy to answer those questions on how some of these numbers came up. Feel free. I did my to go back in the video, because I did my best, but I know I'm going to make mistakes on how to explain some things. Again, if you see any typos, let me know, because I am very prone to making typos when I create these things. Yeah, so that's pretty much it for this video, guys. I hope you guys enjoy content like this. If you guys like this video, feel free to leave a like. If you absolutely hate this because I was a complete Tesla shill, or if I was too bearish on Tesla and I'm a short seller, then go ahead and you can dislike it. It's okay. And then if you guys know of anyone who likes content like this, go ahead and feel free to share it with them. It helps the channel grow. If you're not subscribed and you like content like this, go ahead and subscribe. We can have more videos like this together. And I'm really hoping that you guys share with me why I'm wrong and the reasons why I'm wrong. All right, on that note, guys, I'll see you guys in the next one, and thank you guys so much for watching. Have a good one, and bye.